So good morning. It's terrific to see many of you again. I very much enjoyed the event in Singapore last year, and I recognize a lot of faces in the room from that. I am joined on stage here by a very esteemed panel. We will kind of allow everybody to introduce themselves briefly in a moment. I think, as you'll see, we've got a great perspective across very many parts of the industry that we all serve. We may be a little underweight kind of some of the life and asset management parts that are kind of affecting a lot of the life sector in particular, but I think we have everything we need in terms of taking questions from you as we go through in terms of pieces that we're seeing. My name is Mick Maloney. I'm a partner with Oliver Wyman. I lead our insurance asset management and actuarial practices globally. So have the privilege of seeing a lot of what's happening as we serve clients in P&C life and asset management with a strong dose of private capital these days. So what I'd like to do is to give each of our panelists an opportunity to introduce themselves. A little bit of this is really to make sure that you understand the piece of the industry that they're closest to, the organization that they're part of. And that will become important, I think, as we begin to go through some of the Q&A, in that we, as I said, have fast-moving, innovative, kind of large global P&C and kind of life and health represented here. And I'd like to just make sure you understand where each of the panelists kind of sit in that. So what I'm going to ask each of them to do in turn is to introduce themselves, give you a little bit of color on their organization, and tee up kind of one of our early points on innovation, which is where do each of them see innovation causing most change? And we've heard a little bit Andreas's kind of view on that, but I think it is over, let's kind of time bound it. Let's say over the next 3 to 5 years, what are the big things that they're keeping an eye on? And as they do that, to kind of think of that through the lens of how well we're doing around innovating to meet kind of individual and corporate needs as we do it. So, Mark, maybe with that, I can start with you.
We're doing all that in the intro?
It's 3 minutes.
Okay.
We'll come back to each thing.
Yeah, there you go.
No pressure.
No pressure. Like I'm Mark Adey. I'm the CEO of Crum & Forster. Crum & Forster is part of Fairfax. Some of you guys got to meet Prem last night. I've been part of Fairfax for 25 years. I've been the CEO of Crum & Forster for 10. We're a principally US-based specialty company, so we do about $6 billion of different specialty types of insurance here in the US. And for a company that's 202 years old these days, we are pretty innovative. I just got done writing a book about those 200 years, so if you're interested, and if you're an insurance nerd, look me up afterward and I'll hook you up with that. Andreas was saying you don't want to look too far back at the past, but I feel you should appreciate the past to kind of know what we're up against in the future. And I would say, one of the things we're tracking is really the innovations that are coming online with our potential customers, right? I think it's, Andreas was talking about being customer-centric, right? I think we've seen a lot of changes, one of which I saw on the street the other day. There was a little sushi delivery robot that almost, ran into me on the road, and I'm like, that is amazing. And it crossed the street, it did all sorts of stuff. I'm like, we need to start thinking about that. I was in a Waymo the other day. I know we have somebody from Google DeepMind here. That thing was amazing, right? You're in a car that drives itself, and I'm like, what does that do for personal auto? What does that do for commercial auto? How does that change the way we look at the business? And I think those little glimpses of the future of our clients, we really have to bring back and say, okay, where are we, developing product for that? And so I think we've done a good job of that we'll talk about later on a couple fronts, but I'll pass it off to Andreas.
Andreas Berger, Group CEO, Swiss Re. I'm not going into big introductions, so saving us some time, maybe coming straight to the topic, innovation. I always ask myself, what is innovation? So if I ask people in the room, give me your definition of innovation and what it means to you in your business, I will get many different answers. We get confused. We really have to unpack it and have a structured, systematic approach to innovation. When I ask an underwriter about innovation, it's a product feature in addition to what is there already. I say that's not innovation. And by the way, others are doing it already. So what is innovation? And how we deal with innovation in companies. I sat down with the CEO of a manufacturing company. He said, or he asked me, what percentage of revenues are you investing into innovation? The answer took too long. So when I ask you, what's your spend into innovation? And how do you then generate benefits? What's the case of innovation? We haven't really embraced it completely in our companies. And I can only invite people to take the opportunity to use data and technology as the door opener into this world, because it's expensive. You have to really generate benefits. What does that actually mean? And then you start to think like a pharmaceutical company, like a manufacturing company, which is business as usual for them. There are companies who do that perfectly well, but they are sitting pretty much siloed. They're cocooned from the larger organization, protected from the larger organization. Sometimes they're even startups, and they claim to be innovators, innovation drivers. And then we've seen many propositions failing. Why? Because at some point, to scale, to make it a success is so difficult. So what happens more and more is actually that the traditional industry embraces it, integrates it, swallows it basically, and a lot of innovation is sort of evaporating, it's not there anymore, or some are being applied. But then they're introduced into a traditional workflow, for instance. So I'm challenging us as an industry when it comes to these things. We spend a lot of money on innovation. We start to measure it, and we force our people to measure benefits. It's difficult, I know. And Swiss Re wants to do everything 100% perfect. I say there is no 100% perfect solution for articulating what the benefit is. At least be consistently wrong. Yeah. And one day, as you continue, you will find that truth. Yeah. So that's my input.
Thank you very much. Paresh.
Okay, so if you look at my esteemed colleagues on the panel, I seem to slightly duck out of water. I'm Homeowners Choice, HCI Group, founded the company 17 years ago. So I think all of these people were already in the industry when I started. It's my second career. My first career was in technology. And so I was wondering why I was on this panel until Andrea started speaking. And suddenly it clicked, right? I'm going to talk about what we did as a company. So about a dozen years ago, after having started the first carrier we had, which is Homeowners Choice. And by the way, what we do is we insure homes in Florida. So all these hurricanes we were talking about, we're ground zero for that. Right? We're one of the largest carriers in the state, and we've suffered 3 landfalling hurricanes in the space of 3 months. And we're still here and alive. Now, before I get to that, there's an interesting situation. We have 2 carriers, Homeowners Choice and TypTap. So once Homeowners Choice started and was doing its traditional business, we set about with a idea of innovation. And to quote John F. Kennedy, when he gave that speech all those years ago, take a man to the moon and bring him back alive, it was a moonshot goal. We set aside about a dozen years ago a moonshot goal. The goal was, can you have a carrier that can underwrite risk? So when a quote comes in, quote to bind, without a human touching it, right? Now, it's easy to do, but then you also have to produce all the stuff we all talk about, appropriate loss ratios, appropriate expense ratios, appropriate combined ratios. And can you do this in a consistent, large scale? So we set about building that technology in 2012. Around 2016, 17, it was ready. So then we started using it in a new carrier called TypTap, which is underwritten its entire book with computers. This is innovation. Question really becomes, though, does it work? You know, it's data and all the things you've been talking about. Does it actually work? Well, here's the interesting things. 3 hurricanes, company's doing fine. We're handling all the claims and everything else. And more interestingly, about a week ago, we had our earnings call, and we announced that because of the hurricanes, there will be no rate increases next year. Talk about pricing risk correctly, right? All the things we talk about innovating and doing, it is possible if you assemble the right set of sequence of stuff. Albeit, we did it in Florida, but you know, people would tell you Florida is not the easiest place in the world to do business, but it is possible. And that's what we did. And we're about $1 billion in premium, operating in 13 states. And at this point, I think we can say we handle climate change reasonably well.
Very good. All right, so good morning. My name is Jaime Tamayo. I'm the president and CEO of Mapfre North America, which is essentially our operations in the US, headquartered in Massachusetts and Puerto Rico. And I am also a member of the executive committee or management board of Mapfre in Spain. Our parent company is based out of Madrid, Spain, and operating in close to 40 countries with a heavy presence in Europe and Latin America, as well as in North America. In the US, you know, I've spent, this is my 32nd year with the company, so it's been quite, you know, quite a number of years already with Mapfre. And you know, in the US, most of my career has been in the US, and we operate the largest personal lines carrier in Massachusetts, both in auto, personal auto and homeowners, as well as commercial auto, with operations in 12 states, very much heavily concentrated in the northeast and of the US. And then Puerto Rico has a size of around $450 million in premiums, plus the $2.5 billion that we have in the US. So it's around $3 billion, what we call North America. Innovation. I think innovating is very hard and it's very difficult. And innovating on purpose is even harder. So when we gather at Mapfre and we talk about the innovation, at the end of the day, we've always come to the conclusion that innovation or innovating is to identify those trends, those solutions that, if properly applied, can massively and materially move the needle of your results. And in this sense, and I couldn't agree more with Andres in his opening speech, I mean, data for us and becoming a data-driven company is our goal. And we're concentrating all our efforts, especially our financial efforts, in becoming a data-driven company. I would add that it's not about data alone, it's about good data. And Andres also touched about the difficulties once you start scratching the overall infrastructure that we all have in our operations, how difficult it is to obtain and manage and produce good data. But maybe we can talk about that later. But
great, yeah, thank you very much. Okay, so hopefully that's given you a sense for the piece of the landscape and a little bit of kind of sensitivity to what's top of mind for our panelists. You can submit questions through the app, I'm told, and we will see them kind of come up on the screen up here. We'll also kind of pause and do this the old-fashioned way at a couple of points as we go here. I am hoping there's a microphone somewhere as we do that, so perfect heads up as we do it. Okay, so I'm going to pose a couple of additional questions to our panelists, and then please submit questions as you think of them, and we will take a pause at that point. So the two pieces that I just want to double click on is, and standing back and looking at the landscape myself, I fully agree with you, Andreas. This question of relevance, I think, is a very important question for the industry. And I think there are lots of ways that you can look at it. One of the ways that I tend to spend a lot of time looking at it for publicly traded companies is where's the price earnings multiple as an acid test for how bright the future that shareholders think. And certainly, if you look at it, I think you can find very bright spots. Progressive is one that everybody looks at, from a US perspective. I think some of the ENS players, where they're publicly quoted, kind of get some kind of benefit on that. If you're in the life space, if you're Apollo or you're one of the private capital players, you get a lot of benefit from it. But as you point out, a lot of the industry kind of struggles in that 10 to 12x kind of multiple space. But what I also see talking to companies is this point of how hard it is to innovate comes up time and again, and how hard it is to innovate at scale. And as I think about it and think about the themes that we see, oftentimes you'll hear things about culture, you'll hear things about structure, you'll hear things about talent. And it's maybe, as I observed the panel here, one of the really fascinating things for me is we have what is as close as you can get, I think, to an insurtech in HCI and TipTap. We have a very large global organization in Swiss Re. We have a federated model in Crum & Forster sitting inside Fairfax that Prem talked about last night. And we have a kind of concentrated business inside a kind of, a large business in its own right. And I guess what I'd be interested to hear each of you reflect on, given your own view on it, Mark, is what do you see as the benefits of the Fairfax structure for Crum & Forster when it comes to innovation? What's the benefit of being a large global, Andreas, when it comes to that, if you can crack it and get it right? There are lots and lots of benefits to having a speedboat rather than a super tanker, I think, Paresh, and on that front. The question is a little bit of one of how do you scale it up and what are the challenges you meet as you do that? And then, Jaime, I know you've spent a lot of time generally thinking about innovation in kind of a large context. So maybe if we could run around and ask you to comment from that perspective, and anything else you want, Mr. Mark.
Yeah. So Fairfax is very decentralized, right? I think Prem hit on that last night, and we took a page out of that at Crum & Forster and said, hey, if it works at the Fairfax level, we achieved a certain size and level of complexity that made sense to decentralize at Crum. And, since we've done that, it really unlocked a lot of energy with our people, right? You talk about culture. We see a lot of the innovation bubbling up from our people, right? So they have a problem. It's not to say that we want to paint everything with, the AI brush or the data brush. If they have an issue, they solve it at the kind of lowest level that we can kind of think of. So it's not I call it supply push. I think it's a dangerous model, right? If I said, hey, we need to get on this AI thing, everybody start doing AI, you're going to have a lot of unhealthy, effects of that. Whereas some of the most interesting things we do bubble up from the people, and I'm one of the last people to hear about it, right? So I don't do a formal cost benefit. They might fail, it might get scrapped, it might not work. So the ones that I see tend to be the ones that work out pretty well. But it's getting people kind of at all levels excited about doing things, and maybe it doesn't work out, maybe it does. They want it to work out. And so the Fairfax model of kind of decentralized and really empowering people at the lowest levels we can kind of think of, for us on innovation has really been spectacular. And so, since we decentralized, I think we're 3 times as big as we were, when we started. I think it just unleashed those animal spirits, as it were, and that cultural effect, I think, has really helped us on innovation. And so where we do a lot of business in the gig economy, and so there's kind of a new category that people are like, well, what do these guys need, and how does it work? And a lot of people were really afraid of it. One of the lead companies in that space blew up a couple companies along the way, as far as the insurance goes. And so we said, well, what do these guys really need? They have a different business model. A lot of them are big enough to be substantial insurance companies just on the insurance side, but they want help. They want people who think about risk to help them as customers. And so that's one that we did a lot of work to say, okay, what do these guys need? How do we do that? And it really is kind of a different product set. The other one I would say, and this is maybe an industry thing that I'd be curious what everybody else thinks, but I mean, if you had to say like a win for the industry on innovation, I think cyber is a good example, right? Cyber, for anybody who's been paying attention, the claims that underlie the cyber coverage have evolved faster than kind of anything I've ever seen. It used to be, the target loss was, your credit card data got out there, you blame Target, you do this, then you got all these ransomware claims, now we've got third party. And I would say the insurance industry followed, lagged closely behind what those customers needed. And at some point in there, maybe 2022, really started to push, hey, if you don't have these basic resilience things in your system, we're not going to really insure you. And so the industry in some sense drove a resilience concept through a lot of people that say in 2020 weren't doing, multi-factor authentication. And so I think if you look at cyber, remains to be seen. We may have gotten it totally wrong if there's a big cyber cat, right? But as we sit here today, I think the industry said, this is something we can do. Let's look at it. Let's see how we kind of track this, and the product has kind of evolved. So I think that's a good example, more industry-wide than we were doing it too. But
do you want to say just a little more on this decentralization point, which I know you and I talk. I mean, just how decentralized are you?
Yeah, so we're very decentralized. We have 8 divisions. Each of them run, kind of quasi-independently. They come up with, pretty much their own game plan. They run that. One of the nice things about Fairfax is a lot of our people have been there a long time, and so we know each other, we trust each other, and so they can take the ball and run with it. And it really is a fantastic model. But as it relates to innovation, I think it's it's not that nobody else does it, right? Berkshire does it, as a good example, but a lot of people don't do it and look more at this kind of supply push model where everything kind of comes out of a central thing. And frankly, me as the CEO, I have my limits in terms of how much I can come up with as relates to how we sell travel business or how we sell surety bonds or how we think about the risks. And so empowering people to really make that work has been great for us. But as far as innovation, like I said, it bubbles up. It's practical innovation. People have issues that might be solved by some new technology, and they are free to apply it. Our longest serving algorithm, as it were, it almost feels like an old friend. It's been around 10 years. I would say a lot of the algorithms are more about efficiencies. I think one up on that scale is kind of loss ratio lift. If it really bangs the cash register, that's the next level, but we haven't quite gotten to that yet. Although we did on pet health, that's a whole other story. But the longest serving one really is a triage system for E&S business that helps us avoid temptation on kind of accounts that we shouldn't really be playing with. And it works great, and it's been training for 10 years and really has come along. But that came out of an idea 10 years ago that, hey, there's probably a better way to do this. Machine learning back then was a little primitive. Now it's kind of become a whole industry, right? And some of the way we funded that was out of the kind of money we made from that. That team kept growing. And then I would say just on the data front, and I'm an actuary, so I'm well steeped in the problems with like the historical data sets that companies use. And there were a couple of companies early on that went into AI heavy with data scientists and all that, but they were still using their old, kind of tired data sets, and it was by and large a total bust, right? But now, when you think about insurance data sets, it isn't just our, kind of crusty old loss runs and everything that's in there. You can hit anything that's out there to help you determine, what kind of account this is and what's available. And so kind of that has been a pivot over the last decade where all of a sudden the data that's out there that's available for insurance companies to use, and it's relatively well organized, much better than the stuff we have sitting in the, the books over the last couple hundred years. But again, like I said, the organization of Fairfax and Crum, I think, does go a long way to help us unlock the talent and, frankly, attract a lot of talent who loves that model, right?
Thanks, Mark. Andres, as you comment, you're on record, at least for the Insurance Insider, asking you about this kind of historical university with a balance sheet point for Swiss Re. So I know you're in the middle of thinking a lot about cultural change. So it'd be great if you could comment on that as it relates to this innovation point as well.
So, we're not Fairfax, we're not Berkshire Hathaway, we're Swiss Re, more than 160 years old. But we also have to understand what that actually means. You already were referring to Swiss Re as a big company, etc. And I think I'd like to really break that narrative because I hear it everywhere. Yes, we're big in the sense of market importance. We're part of the top 3 reinsurance groups in the world, so market leading. But if you come inside Swiss Re and you hear this, I say this is not true. We have 15,000 employees. Most of our cedents outnumber us big time. Yeah? They've got 100,000 more, 150,000 employees. So we're not big. We sit in Zurich, a beautiful location, nice view on the Zurich Lake. And there are hidden champions in Switzerland with about 15 to 20,000 employees who are market leading, who organize themselves differently. Yes, we operate on one balance sheet. All 3 business units operate on one balance sheet. But we said, you are business units, you need to service the client. And the group needs to support you. And there's a lot of discussion around what that actually means. So as we speak, we go through we call it culture activation exercise. We try to define who we actually are and who we're not. And how do we organize ourselves most effectively to service the clients? And we needed to reset our thinking. When I did my listening tour and got feedback from externals and internals, it was super consistent. Everybody was saying we're pretty complex as an organization. Why? Because we were always, as a reinsurance company, in the beginning, centrally organized, like most reinsurance companies, and then expanded, and then branched out afterwards. As the world changed, we added to the structures without touching the original structures. So we created complexity, multidimensional matrices, accountability was diluted, etc. So made it slow, more expensive, and not client-centric. So I said, okay, we need to change the context, and we need to answer 4 questions. Each and every employee must answer 4 questions. Question 1, what makes us more client-centric? Question 2, what makes us quicker? Question 3, what makes us improve technically? And question 4, what makes us more profitable? The rest, forget about it. It'll come. The rest, forget about it. So we call it internally, not a university with a balance sheet. Yeah, that was a CEO of a broking house saying it with the best intentions. He wants to help us. We called it less academic, more business. From super brain power, but sometimes lost in sophistication, to applied intellect. Why am I doing this? Who's benefiting from this? How is the customer benefiting from this? Etc. So that's the process we're going through, and hence the role of the center discussion is coming up. And we said there's 3 categories. One is the category core. Core to the group. What is it what the group has to do? So you start with the regulatory rules and etc. But then on top comes, what does Swiss Re really want to define as core? It's not just what the regulator wants. There's more than that. That's the price to be part of the Swiss Re Group. And then we need to determine how much do I want to afford for this core element that has value for Swiss Re. The second category is common. Good managers collaborate, but they only collaborate when they see benefits. So that's why we call it common. It's something that you could do in a business unit, but business unit leaders agree that there are cost or revenue synergies. And said, okay, we give it to somebody in the group to do it on our behalf, but then we measure it rigorously and hold people accountable. But it's not a one-way road. I, as a business unit, then also have to articulate very clearly what my demands are, because this is also driving the costs, data consumptions, etc. So that's the common element. And then there's a distinct element. Business unit, you decide what to do. You're responsible for your expenses. I'm not telling you what to do. So, and then in people's imaginations, they start to dream and say, okay, I'd like to be a Berkshire Hathaway or a Fairfax. 75% is me in the business unit, and maybe 25% maximum is then the group. I say, hang on. Maybe that's ambition, that's your bias maybe. Let's go through the exercise. Each and every group function, and the biggest block is obviously data and technology, IT, always. It's also finance. How do you want to organize and steer the company? I've got Anders here, you know, my future group CFO colleague. And this is then something where we can reshape the way we do business in a very traditional industry like reinsurance. A few decades ago, not for all reinsurers, but for most reinsurers, cost was not really a topic. Cost is becoming strategic. For private insurance companies, it was mostly the case, you know, in retail in particular, personal lines, etc. For brokers, was a topic. So that's my answer to this. And by the way, just a quick one on the irrelevance of the industry. Yesterday, I was also already challenging a little bit the view that we're losing out because we were looking at, and you probably also now are referring to reinsurers and insurers, but the brokers play a very crucial role here. And your multiples do not apply to those brokers. So there is value being created. The question is really where in the value chain does it sit? And where should it sit going forward? Again, here data and partnership plays a role. So much more we can do. And just mentioning one headline, data ingestion. Brokers in the insurer, reinsurer value chain, there's so much we can gain by partnering there. We struggle, it's difficult. I always say it's the cold start problem, you know, and to get things going. And that has to do with culture too.
Yeah. No easy answers. Paresh, do you want to comment on life in a speedboat?
Well, it's interesting, right? We're big now compared to what we used to be 17 years ago. We started the company with 12 million of capital, right? I think people would use that, in this room would use that as pocket change, right? When you start out with 12 million and there's everybody else out there, and you realize you're part of this massive industry, two things. The question of irrelevance, you realize without insurance, people can't buy houses because nobody will lend them money, right? We're the oil that lubricates the global industrial economy, right? So insurance will always be relevant. That was kind of obvious to me even when we were a very tiny company, right? So if you don't have insurance, it makes a lot of risk-taking business endeavors very, very difficult. So I'm skeptical of us ever becoming irrelevant, right? Now, in terms of the speedboat, when you're that tiny and everybody else is that much bigger, it makes you very paranoid very quickly because anybody else can come over and take over whatever little market share you've built very quickly. Paranoia isn't a bad thing, it just sharpens senses. So when we got to be a certain size, we suddenly started looking at things and saying, how do we innovate, right? And how we got into it was because that paranoia said, sometime, somewhere, if you're successful, somebody much bigger and larger will see you're successful and they'll want to come take your market share. How are you going to defend yourself, right? When you're tiny, it becomes a very relevant question. So we got thinking about it, and we said, why don't we think about how insurance will be done 20 years hence, right? And why don't we be the company that builds that? So you won't become irrelevant. Just a whole different way of approaching innovation. And what we very quickly realized was there's two kinds of innovation. There's incremental innovation, and there's game-changing innovation. Right? And seeing that I came from a tech background, let me kind of illustrate. And I actually brought props. So around 1980, a company called Motorola invented cell phones. And then for the next 27 years, the cell phone industry grew, expanded, became better, very tough competitors. There's Nokia, there's Motorola, et cetera. And it culminated in this technology. Remember these cell phones, the little Motorola razors, right? And if things had continued on, these would have evolved and got better and better, right? But what changed the world was some company that had never built a cell phone before came out with one of these, right? These people had never built a cell phone ever, 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 till Apple introduced the iPhone, right? And they changed the thing, because this thing, while it's a phone, and this is a phone, radically different. You can't evolve from here to there, because all Motorola would do is make it bigger, smaller, tinier, more battery power. You never thought about, you don't need a keypad. That was the innovation. So once we sort of figured that out, we sort of started saying, this is my earlier comment about how do you do this where you use data. Well, if you use data, when the data comes in, you have to make the right decisions. It's just it's the foundation on which everything else is built. But you've got to build the whole rocket ship, right? So how do you bind policies without people, right? And there are times when all of this, solving these problems becomes very relevant, because you can't evolve from here to there. So being that paranoid speedboat, what we did, which is actually available to everybody in this room, we took a group of people, sent them across the parking lot and said, go build the insurance company of the future. Just a totally different, remove them from the day-to-day challenges, right? For a small company of our size, it was quite a significant investment, right? But it proved dividends, because we weren't doing it as we were doing it as insurance people who knew what insurance was, trying to build technology, not what a lot of insurtech has become, which is tech people trying to tell you how to do insurance, right? That doesn't work as well, right? And when we did that, that's what's led us to this growth. So at this point, right, we're still tiny compared on global standards, but what we do know is we can do this not only in Florida, but in 13 other states. And to give you an idea as to other things we've done in the last 6 weeks or so, besides handling the hurricanes and all the claims that go with it, all of which also gets done in the cloud, we also grew the business by 20%, right? In the middle of two cats, because there's a need for insurance after the hurricanes that went through Florida. So the state came to us and, please, can you take more customers? We said, sure. So these are the kinds of things. There's a whole new world where if you get to the iPhone era, you will look at the world differently than if you stay in the Motorola era, yeah? So it's always makes it interesting.
I love that analogy. Jaime, do you want to comment? I know particularly you've been thinking a lot about innovating at scale globally. So maybe a comment there, and then we will pause and get questions from the audience.
Sure. We are at Mapfre. Our group is structured in basically two big tranches: the corporate tranche, based out of the different corporate areas, based out of Madrid, Spain, and then the regions or the local businesses with three main markets: Iberia, Spain and Portugal, Brazil, and the US. So about 8-9 years ago, we I guess like everyone else, we started thinking and talking and debating about innovation, about what to do, and we proceeded with the kind of I would call it the usual things, the common things that everybody was doing. So we established our innovation hub. We created a separate unit for investing in startups with potential for growth and innovation in general. And we started talking about or having the same talk as everyone else. Years later, about 3 years ago, we realized that what we were doing was just being followers. We were just doing and creating and putting out before the markets and before every stakeholder that wanted to listen to us, kind of the same things that everybody was doing. But when we asked ourselves the hard question about is innovation, is everything that we are currently doing helping us in our business? The answer was very, very, I guess, sad, because it wasn't. Then is when we realized, not realized, but then when we decided, okay, what is changing in our view, or what could change in our view the way we manage our businesses? And then data. We came back to data. And then we said, all right, but we've already, by that time, we had already created and established advanced analytics teams in our big, principal markets, and they were doing a very good job. And all these new algorithms that they were developing and they were putting into production, but with no scale. So the results were always positive, but with a pretty immaterial scale. So essentially, the numbers were, our results were not moving. We were not improving. So so we went back to to the drawing board and said, okay, data. How are we going to, is data, as well as 4 years ago, we already, like everyone else, we started seeing the artificial intelligence boom, the generative AI boom. So we said, all right, what is it that we need before we start really producing stuff that can move the needle? And we defined 3 major pillars. The first one is governance. We realized that we needed to sit down and write down every single norm, regulation on how, an internal regulation, on how we wanted to handle data. This is from the internal point of view, but also from the external point of view. The regulatory framework in Europe also forces companies and forces us to adapt and adjust to their regulations to a lesser extent in the US. The second pillar is the infrastructure. You really need a very solid technological and operational infrastructure in order to maximize data. Because one of the things our data scientists and data managers, our advanced analytics individuals were telling us was that they were spending too much time cleaning up data. And you don't want them to spend time cleaning up data. You want them to produce algorithms and to improve the operations. In that sense, we defined what we called our technological ecosystem. So what type of technology we wanted to use, what type of extraction tools we wanted to use, what type of profiles we wanted to have within the company, so that they could extract and manage the data in a proper fashion. And there is when we found out how complex the task was, because we, as insurers, we all pretty much face the same challenge. There's a word, a couple of words that are kind of almost the unpronounceable, which are legacy systems. So we all have legacy systems. So in order to, that we all want to change, and we are in the process of migrating to the new systems in one way or another. Producing good data in this environment, which is not environment and which is not the status or the situation that startups or insurtechs face, is complex. So governance, infrastructure, and the third one is talent. We needed new talent to be incorporated into the group. We realized that we were a very traditional insurance company or insurance group. So we started, in a very by design forced fashion to incorporate new profiles into our organization, and paying for it. So you really need to put euros and dollars to bring top talent into your organization these days in these particular profiles. And then big question is how to retain that talent. So our experience is so far that the only way to retain these individuals is to give them to give them leeway, to give them a good value proposition on how important their contribution is, and move on. So I think to summarize, I mean, we've shifted from the what everybody else was doing, the realization of that wasn't working at all, and then focusing on data, AI, as the main kind of backbone to structure our innovation approach.
Thank you very much, Jaime. Yes, a lot about the how. So I know we're creeping up on time, but we have time for a question or two. If you have a question for our panel, if you can raise your hand, and we will get you a microphone. Table at the back here. Have we a mic?
I have a question. How do you balance objectives in growing your business with the interest of being benign, doing well by, as Prem said yesterday, doing well by doing good? So to what extent have you incorporated a kind of an ethical framework that underpins your organizations, and how upfront is that?
I mentioned the purpose of Swiss Re in my little address, to make the world more resilient. And I think people, when they hear this, immediately they think about society, protection gaps, what our role should be in society. That's the main reason also why talents want to join us, because they want to do good. I turned it around and I said, yes, this transcendent mindfulness is very important, but we need to bring the macro level into micro to make that impact. Otherwise, you stay macro. To give you an example, NatCat, there's so many studies, university studies around NatCat. All of them create the awareness, but they don't tell you exactly what to do about it. So I said, we don't need awareness creation anymore. We all know what the problem is. How to bridge it, to bring it from the macro level and from the WEF C-suite discussion where CEOs make commitments, not knowing how to deal with it in their companies. And I said, that's where we can bridge with data and technology. But Jaime, you said it so well. You need to set the foundations right. Otherwise, it's chaos. It's anyway chaos in very large insurance companies that grew over time with M&As, etc. That's the legacy problem. I always call it the IT spaghetti underneath, and then they try to have integration layers, just to make sense of data. But the spaghetti doesn't go away. You have to pay for the spaghetti. You see, and Alan, I'm already in a micro environment. So we said we have stakeholders. It's the client. We want the client to come to us for our technical excellence, the clarity, the speed and consistency of delivery. The clients don't think about making the world more resilient. That's sort of built into our proposition. The shareholders, fine, they want us to meet or exceed our targets consistently. But the employees, they want to be proud to work for an organization and to make the world more resilient sets us apart from a lot of other companies. And then society at large, that's where the macro element plays a role. So it's there.
I would just say to Alan's comment on Prem's thing last night, right? Like Prem really does, love giving back, and so he's set these guidelines. And I think a lot of our people, especially the kind of younger generations, really love to see that we're giving back to the community kind of directly with kind of charitable purpose and all that. But and I think Andreas hit it. The business itself, insurance has like a social benefit, right? Paresh hit it too, right? You're not going to buy that house in Florida if he's not operating. And so I think there is a messaging aspect that I think we tend to miss, and whether it's resilience or bridging the gap between kind of the macro picture to the person you're trying to hire. But insurance has a social benefit straight up, and I don't think we should sell that short. Like that should be something we lead with when we're hiring young people. Hey, this is a great business. It's an interesting business. It's a tough business, but it really is a business that underpins the social fabric of everything we do. And so you should feel proud to be in it. And then, we do kind of good deeds on top of that as part of Prem's idea of giving back to the local communities, right? But I think a lot of people miss that just fundamentally it's a good business. Right?
I saw you put your hand up, Paresh. If it's okay, I know we have one more question over here, and I'm conscious we're coming up on time. Thank you for the question. Yeah, over here.
Hi, my name is Vishaka, and I think the point was brilliantly made by the Motorola and the Apple. I think that was a great illustration. Insurance companies have a reputation of being slow to change. We have a reputation of not adapting to technology. So are we doomed to be the Motorola's? Do you have any specific direction and actionable in terms of how we can probably, break the trend and be the Apples ourselves?
Yeah, I think, actually, the whole question about insurance not being innovative, it is innovative. You just don't think of it in the right context, right? Because if you think of innovation as evolution, you get one way, right? But even in this industry, right? Cyber risk, was it an insurance product 20 years ago? Look what's been done. It's been innovated, right? We do innovate. It's just in the context of what we're talking about, which is big change. You got to think not evolution, but revolution, right? That's why that comment about set a crazy goal, put a man on the moon and bring him back, right? The guy who was saying it, John F. Kennedy, he wasn't a scientist. He didn't have any idea how to do it. In fact, I think when he said it, everybody in NASA up the street went nuts, going, how the heck are we going to do this by the end of the decade, right? It wasn't the fact that he knew exactly how they were going to do it. It was to set a goal, right? If you set an outlandish goal, you may succeed, you may not succeed, but you'll go a lot further than if you try to go 1 mile further, another mile closer to the moon, another mile closer. That wasn't what the idea was. Set a bold goal and go at it, right? And that's what the iPhone was. And oh, by the way, to talk about innovation, Steve Jobs did it once before. When Apple started out making Apple IIs, right? Then they decided they came across the Mac. When they were going to make the Mac, They took all the best engineers, sent them across the parking lot, and said, you are relieved from all duties with the Apple II, which is where all the revenue and the profits are coming from. Go across there, you have a year to make a Mac, right? That's how you do those things. Everybody in this room has people in their organizations that are extremely talented, but they're also tied down with their day-to-day jobs. We all are, right? So once in a while, getting that relief to go over there and say, how would you do this again if you didn't have tied down by legacy issues or anything else? What would you do, right? It's amazing how creative people become when not tied down with the past, right? And that's why Apple built that phone, because they didn't have a 20-year history of making phones. If they had, you would have just got a new Motorola. That's the weird answer to the question. By the way, there's a question up here on the screen. The answer to that is a simple thing called Iraqis.
We may give you the closing comment on that one, Andreas, and then we're at time, so I'll wrap it up.
I love that question because it's a question, it sounds so easy. But the problem is we need to understand what culture we come from and what strategy we have. There are companies who don't want to be first movers. So that's very important. So once you know that you want to be or are a first mover, you have to go through the exercise of identifying or determining what the capability models of the future are, and to do that honest gap analysis, because you need certain expert skills versus basic skills. A follower doesn't need expert skills because they're not first movers. And that's an exercise we in the industry have to go through, because the curricula we have in the industry, they're not preparing you for these things. So that's within the companies, you have to determine this and invest into the right areas. Obviously, you need to benefit then from being the first mover. Yeah? So there's
One just clarification on that, and again, I think it's interesting because I think there's an insurtech kind of fallacy, right? I would bet on you guys coming up with something interesting with your kind of war chest before the underfunded startup, right? And so I think that is something that people are like, oh, you guys aren't innovative. You or we or any of us up here probably have a lot going on that's innovative that we're not taking out, front page ads or doing interviews on, but it's happening and there's a lot of money being thrown at it. And so I think there's a little bit of a, in people's head, oh, it's not innovative. There's a lot going on that people just don't have visibility on that we're all doing that I think is pretty innovative.
Yeah. Well, look, one closing comment, I'll leave it with a bit of a cliffhanger with a recognition of some of our life folks in the audience. I was having a conversation with somebody yesterday that anyone familiar with the life space will know that there's a massive amount of disruption going on because of the private equity wave that's kind of come in behind some carriers. I think a little bit to me is, what's the catalyst for real change on the property and casualty side of things? It may be softening markets, it may be something else, but I see everybody grappling with this. Are we moving fast enough? What's the right construct? Is there enough, is there enough going on? I have to say maybe a bit of a controversial statement, but I think for the life industry generally, I think the arrival of private capital has catalyzed a lot of change that will be positive in the long term. To me, the question a little bit for property and casualty is what is that thing that really jolts the industry to kind of move forward, and is it there already, or is it emerging, or when will it emerge? But in any case, I know the panel will have views on that, and that's my apologies to leave it with a cliffhanger. But if I can ask the room, please, to thank our panelists, and we'll move on. Thank you.